volatility is very low. I mean, we had a little bit of a spike last week when there was a down 2.5% day, and then, you know, right back up. But it is interesting that we're getting sort of nervous questions from clients, like things are too good, this can't last. What could go right in response to that sort of sentiment is, and I feel like I'm a parrot. I've said this the last couple of videos, is maybe things don't fall apart. You know, to me that would be things going right after the run up that we've had in the stock market the last 2.5, 3 years. Not having a crash would be things going right. You know, maybe similar to the analogy that a couple questions ago with NVIDIA. You know, the stock is in the same place it was 3 months ago. The company obviously is still doing just fine, but the stock, basically the stock's the company's fundamentals have caught up to the stock price, or in the process of catching up. Maybe that's what happens with the broader economy. Maybe the stock market's gotten a little bit ahead of itself, but it doesn't fall apart, and we've got a period of the economy sort of catching up to it in a way, where the labor market becomes a little bit more healthy with the help of this stimulus of lower rates. You know, that does help companies that are, you know, relying on short-term cash and funding needs. If the costs for that go down, that companies can maybe reconsider having to make spending cuts. Another thing that could go right is that the market leadership reorganizes itself, which is also something that we discussed on this video. You know, maybe tech doesn't need to keep leading us for the next leg higher in the stock market, and maybe bonds provide some positive returns, which we've started to see the last 30 days. So a diversified investor might continue to have a good 3 to 6 months from here, with the help of some unloved sectors like healthcare, energy, consumer staples, and fixed income. And to that end, should technology not be the leader of the market for the next 6 to 12 months or longer, then it's important to have exposure to some of these other sectors. And for people who have been all in on tech, or maybe you weren't even all in on tech, but you weren't paying close enough attention to rebalancing your portfolio, and tech has all of a sudden become 50% of your portfolio and you're approaching retirement, that's something that requires attention, in my opinion. And so obviously you want to pay attention to taxes as well, but this could be a really great opportunity to do some rebalancing, especially in retirement accounts.